Good evening, everyone, and welcome to first Admiral Markets webinar in New Year. So it's 2015, and I hope that you had some good time charging your batteries. Maybe if you maybe relaxed from trading, and you could witness some big moves during the weekend. And definitely, I warned you that there might be some huge volatility around New Year and after New Year. And that is why we should take a break in between those 7 to 10 days. It's always good to have a nice break. And the thing is, many things might have changed during this late 2014 and now in 2015 concerning euro currencies. So we will cover that, of course, today. And I wish you a good year in trading and many pips. And as always, we will try to grab as much as we can from the market. First of all, I wish all of our newcomers also Happy New Year, and I'm looking forward for a good trading year. And you're all welcome to visit our free webinars with Admiral Markets and these free setups. So there will be some changes in our session recaps. I will show you that. I have added scalping level zones so you can scalp a bit and a little bit more of analysis. So before we begin, our standard risk disclaimer. Online educational materials are developed by Admiral Markets in Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get the corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with Forex market. By accepting this risk disclaimer, you're also proceeding further with me. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author. It's me, and in a way it represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not a .co.uk website, but the globalnews.com website. Forex is risky business, and this should not be taken as advice. It's a personal opinion only, and this webinar is for informational and educational purposes only. Okay? With having said that, guys, we are ready to proceed. So this is a little bit different. As I said, for our all newcomers, welcome, and I need to tell that all session recap trades and analysis is done with Camarilla MACD, my proprietary method. As always, you need to give price a breathing room. So you enter usually within 5 to 10 pips of the predicted level if it's in agreement with your system. And this is concerning our positional, which are trend trades, and alternative, which are counter trend trades. If you want to scalp, then you should wait for a particular level, okay? Respect your stop loss, okay, or add the spread to your stop loss. So if you're buying, add a spread. If you're selling, add a spread to your stop loss. If you're making pending order, then add the spread to your pending order. We usually take one position, so we take either positional or alternative trade. With scalp positions, you are free to go as long as if your system or method defines scalping suitable. And for all of these pairs, I will give you scalping levels so you can basically put it on your chart. Position trades are trend trades, okay? Alternative trades are counter trend trades. So when you see position, that means trend trade. When you see alternative, that is counter trend trades. Then we might have breakout trades and scalp trade levels. Scalp trade levels will always be included in all of these pairs which I will be presenting you. Usage of trailing stop is highly recommended. I already explained how you can turn your scalp into scalp swing into intraday position. So if you want to turn a scalp into intraday position, you should refer to our webinar, Scalp into Intraday, okay? These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Because we will be having Fed minutes on Wednesday, probably I would suggest that you take these setups only for today and tomorrow. Scalp trades should be done at or very, very close to important support resistance levels. These scalping levels which I will be presenting you are calculated by historical levels along with sorry, Camarilla. So you can add these levels to your system. Pay attention to my Twitter updates, because occasionally I will do some Twitter updates and I can tell you, okay, now it's time to close, or maybe the situation has changed and we should rechart our orders. Term pips pool is the maximum available number of pips you could have got on these recap entries. So now everything is clear. We can proceed with setups. And as always, I wish you to trade safe, and I wish you many, many pips in this new year. So hopefully we will have it together. Okay. So market plan for euro dollar. Guys, I wanted to tell a few things about euro dollar. Let me open the chart for euro dollar. So euro dollar, what happened with our loved currency, euro? Well, guys, you could have witnessed that many, I can say, also not strange things, but many unexpected things happened during from Friday to this Monday, and basically we had a strong, very strong sell-off of euro dollar pair, especially euro, because this short-sided euro basically is because a big overreaction in thin market conditions to the news over the weekend. That is why I'm always saying to you, do not leave your positions during New Year, or do not trade anything before the New Year. I mean, if you know how to trade, it's okay, but usually these things can happen, and that can have a big impact on your account. I know that many traders longed at 1.2000. You know, from technical perspective, it was good, but look what happened, guys. Look what happened. Price has dropped 150 pips after the Monday, and now it will be very hard for euro to close the gap. If you remember my analysis for today, I told you that you should go long around 1875, and that was the analysis which I did today. You remember this analysis, and definitely what happened is, guys, if this level breaks 1875, next support is 1850, and then it will be 1750 and 1675. I need first to explain what happened to euro. So basically, during the weekend, the German Chancellor, Miss Merkel, she said that we should all be prepared to allow Greece to leave the eurozone if anti-austerity government wins the Greek elections. So primary mover of this unexpected euro-dollar sell-off was basically news around the Greek government elections, which will happen on 25th of January. So German Merkel thinks that Greece exit, or so-called Grexit, will be almost inevitable if the leader of opposition party in Greece basically leads the government after the election and abandons discipline budgetary measures, and does not repay Greece debts. Okay, so if that happens, Greece could exit eurozone, and that basically will give investors a boost to even further sell euros. Now that is not a good thing for eurozone, because Syriza party, you know, Syriza party in Greece is definitely pretty much oriented against these measures which Greece now is conducting, and basically they may be fed up with these austerity conditions, which will result of continued membership in the Eurozone. Now, the burden of Greek debt stands around 160% of gross domestic product. That is huge. So the Greek elections is the first test of euro-dollar in this year. And guys, unfortunately, if Greek elections prove to be bad for this government, we might see a huge drop in all euro currencies. And what can happen is, I don't think that it is also sustainable for Swiss National Bank to leave the floor at 1.2000. It will have a huge impact on every single euro currency. Yes, and as Siakos is saying, I know Siakos, you're probably from Greece. He's saying that these measures will lead to disaster and the Greek debt is not sustainable. Greek elections will be against this government. Yes, that is definitely true, guys. But I need to tell you something. I am a master degree in economics. And sometimes, guys, even though if you think that the measures are not sustainable, you need to be strong, and basically you need to think that those measures are sustainable. 25 years ago, Serbia was in a lot worse situation than there is a Greece today. Serbia had the biggest inflation in the history of the world. And basically the average payment in Serbia during 1990s was approximately €1, 1 Deutschmark. And basically that had a huge impact on Serbia, and Serbia is suffering also from it today. And I think that every measure that is imposed by the government should be pretty much good for domestic product. And if it's a reason to save the Greece from default, I think, guys, that Greece should stand with this government and sustain the crisis. Believe me, I know that it's very hard. And yeah, communism is chaos. It's not a solution. I know that is very hard for Greece to sustain this. But believe me, if Greece exits Eurozone, that will be worse for Greece. That will be bad for every and each Eurozone member. I just cannot stress out that these are very turmoil times. And I know that now we basically are traders. We are not, we don't care if euro-dollar is going to fall or I don't know, is going to rise, because we are trading short and long positions. But now this is the time for the people in Eurozone and in Greece to basically decide whether they will be strong and sustain these measures, or they will maybe delve deeply into the chaos after the elections. So guys, if you ask me, I know that I don't have any right to vote on Greek elections because I'm not from Greece. I know from my personal experience, because I lived in Serbia 25 years ago, this country was the primer of the inflation and was the best example on how bad policy making was happening. We had the worst politician in the history, which brought this country into 200% worse situation than there is Greece today. And the thing is, guys, if Germans are opposed to any debt renegotiations and reports, basically that should be taken very seriously, because Germany is the leader in this region. And if Miss Merkel is saying that Greece should withstand this impact and basically she's opposing debt renegotiations, it should be like it. I know it's hard, I know it's unsustainable, but it can be a lot worse. So the repercussions from exiting of the Greece from Union, basically they can have major economic impact, but also they can provide another political catalyst from other countries to exit, namely Italy or Spain, and that can be a problem for the European monetary policy and union as a whole. Okay, that can pose a bigger problem than there is only a Greece exit, because it can serve as a catalyst for Greece. Law is asking, do ECB quantitative easing may make some differences? Now guys, ECB quantitative easing can make differences, but not in the Greece. Now, those are wide measures which can be applied from for European Union as a whole. But if Greece exits European Union, those quantitative easing measures will not have any impact on the current situation, because Greek exit will be deemed as a bigger problem. Now, while we were talking about ECB quantitative easing, euro dropped from 25.00 to 22.50. And when Greek exit is the option again, euro dropped from 22.50 to 18.50, breaking, guys, this low. And you remember, this low was the catalyst for further central bank intervention, which brought euro dollar up again. Now I know that there are other solutions. I know there are other solutions, Mike is saying, Mike, but guys, I just cannot stress out how it's important for whole European Union to have a Greece. I know Greece was always in some debt. I know that, and that's the case. But now it's the time to be united. You should be united. And yeah, I know you're saying that you don't have European policy, you have German policy. It's the truth, but Germany is the leader in this region. Every time we oppose to German solutions, it was only worse and worse. So basically, I know it's very hard, and I know but the Germans are leader in the region. And if Eurozone starts to collapse, okay, if Eurozone starts to collapse, then there will be other countries which will also look for exit of the Eurozone. Now, I hope that everything will be fine, but you can see that the price has hit 1850, and now what I expect from euro, guys, I expect euro to drop further, and we might see some pullback. We might see a pullback on Wednesday, because on Wednesday we will have Fed minutes. On Friday we will have NFP, and NFP for now at the moment is expected to be a lot worse than previous. Okay, but only a slight relief which might come for euro on Friday might be good for selling a new short selling. So what I think for euro dollar is, this is what I think for euro dollar. Primary position is sell at on 2030 with stop loss 2055 and target 1.1900. We might have alternative buy position in 1875, 1850 stop loss with trailing stop. Those are trend and counter trend trades. Scalping levels for buy is 1875. Scalping level for sell is 1950. 1975, and this is the mistake, 1.2000. These are levels for scalps, and I think these levels will give us scalp trades. This is primary positional trade. This is counter trend trade. And what I expect, as I told you, euro to drop further with no significant pullback, only on Wednesday, maybe on Friday also. If it closes the gap, that gap close will be enough for others to take a sell. This is if the sell is maybe over, if the new buy, overstretches a little, it might come to 2030, and this could be a very good entry for entering short trades. Of course, 1.2000 now is the place where short trades could be put. Okay. Again, euro dollar does not look particularly fine. It looks very, very bad. You can see this was the level, and look at the date, guys. Look at the date. Now I will tell you the date. The date for this move was 1st of this is monthly, so on June, I think it was 10th of June 2010, euro dropped to 75, and then it was bought in central bank intervention to 21.93, and it went up to even 48.81. So this was a very, very huge counter trend trade, which eventually turned into a big trend trade. So if this level is broken, and I don't think it was broken in the first attempt to sell the pair during the weekend, but it was, volatility is now back in the market, and now there are a lot of institutional traders and retail traders who will push the price up. But if this level breaks, then we can go for 70.50 and 16.75. So guys, what I think for euro dollar, the primary move for euro dollar now is political crisis in Greece, then quantitative measures for the whole eurozone, and I can say microeconomical movers are Fed minutes on Wednesday and NFP on Friday. So every chance, if the NFP comes worse than expected, we can go for a next sell on euro dollar. So my primary position trade is 2030 with tight stop loss targeting 90.00. 1875 is possible buy trade. I will use the trailing stop, because if this level is broken, then we can see another push to go up, but eventually it can break down. For buying levels 75, for sell levels 90.50, 90.75 and 1.2000 as scalp levels. GBP dollar is also a big loser in the previous week, and that is definitely a downtrend on GBP. But guys, as you know, I would like to see a bigger pullback on GBP dollar before I can sell it again. And that bigger pullback could come at 53.00 with 53.30 and target 52.20 if it comes. So GBP dollar, look at this gap, which this was the gap which I can say it was closed, but now look at this pattern. It's M pattern, so this is, guys, effectively M. You can see this is M after the break of this gap. So M pattern, but I would like to see a bigger pullback. So for me, bigger pullback can only come around 53.00, because this is what I expect here. I hope that this level will be sold again, and before the gap, you can see with Fibonacci, basically it stands around 78.6, which is a deeper retracement. And because now GBP has been bought of this level, we also have scalping levels. So alternative trade is 52.10, 51.75 stop loss, 52.90 trailing stop for counter trend trade. Scalping levels 51.75 definitely. If the pair drops without giving us any of these trades, we can buy at 51.75 and 51.90. Those are scalping levels. 52.80, sorry, is again scalping level. Okay, I prefer trailing stop with at least 15 pips. So after the 15 pips of a profit, we basically can put our stops to break even, or we can secure after 20 pips of profit, we can move our break even plus 15 trading stop. So only after a big pullback, I would like to see, not big, that is not a big pullback, but if the price pulls back to the level, I can try to sell it, but not now at this moment, because the problem is it's too low. So now we can go maybe for a scalp trade around 52.10. This is counter trend trade, sorry. And these are scalping levels, 51.75, 51.90, 52.80. So you need to choose for your, if you want to scalp, if you want to take counter trend trade, if you want to take positional trade. So whichever we can trade, we will trade. So this is what I expect for GBP dollar. For Australian dollar, again, 81.30, 81.60 stop loss, 80.50 is target. Scalping level, sell scalping level is 81.05. Scalping levels for buy is 80.50 and 80.30. So these are scalping levels, these are sell levels, okay? Euro dollar for counter trend trade, yes, I don't have any TP, Mohammed, because you will be using trailing stop. This is a risky trade at the moment, because if this level is broken, it might go up again, but it will eventually go down. So use trailing stop without any target price. Obviously, target for this ultimately should be 1-2-20.00 gap close, but use trailing stop. I was aiming today on that close, but that didn't happen. The price went to 90.35 and then it dropped again. So that is why I say use trailing stop. For Aussie, these are the levels. You have the levels for trend trade. I don't have any counter trend possibility, because I don't see any potential good counter trend possibility at the moment. But you have a sell trade, you have buy trade, and you have scalp sell. So 81.05 sell, 80.50, 80.30, those are scalping levels. And primary positional trade is 81.30, sell 81.60, stop loss at 80.50, which serves as a potential buy trade. New Zealand dollar, it's in downtrend. I would look to sell around 77.50. 78.10 is our stop loss. 76.60 is our target. 76.40 is scalping level to go long, and scalping level to sell is 77.30. So New Zealand dollar, you can see New Zealand dollar now. I can say that New Zealand dollar is in a nice downtrend, but for a next sell, I would go a little bit higher. So 77, I will mark this also with Fibonacci. It's a little bit clearer to us. So 78.6 deeper retracement for sell. So it's around 77.40 to 50. Okay, I will mark as this so it doesn't confuse you. Okay. So 77.40 to 50. Stop loss 78.10. Use low risk, please, and 76.60 is the target. Okay. So if this pulls back, it should go down. Primary levels for scalp trades buy are here. 76.40, 77.30 is sell. So 76.40 is our level to go long, and 77.30 is our level to go short as a scalp trade. Okay, and try to turn a scalp trade into a scalp swing. So if you're aiming for 10-15 pips, try to turn those 10-15 pips into bigger pip pool. Let's say try to turn it on I don't know, for example, 25-30 pips. So scalping levels and sell position. Swiss yen 119.25 is sell, 119.55 is stop loss, 118.75 because Swiss yen is not our major pair. I wouldn't give now scalping levels, but because I didn't manage to calculate it properly, so I only give you a trade which is positional trend trade. Swiss yen 190.25, it's very clear level. Swiss yen 190.55, so we need a little bit more of this pullback. I will mark this with retracement, very clear, ups and downs, 125, and we can also see here the level. So around this region here, we have a nice confluence zone, and this region here should give us another sell. It's very clear. So previous breakout. Okay, this is basically breakout, pull back now, and I hope for a retest of this region for another good sell. Okay, so this is swing high, swing low, and we also have nice level here, which is basically a low of this candle, 29.28. So this is our zone for selling Swiss yen. Okay, 30 pips stop loss, target 180.75. Okay, so this is Swiss yen, and finally euro yen. I will look to sell euro yen around 143.30, 143.60 stop loss, 142.60 is target price. Okay, so euro yen, again, euro yen, clear high, clear low. I like these pins when I see it because these pins are telling me a lot about price action. So pin here, pin there, and we have our setup. Of course, this is done by Camarilla MACD, but now I'm translating you this. So guys, I don't think euro yen can take up this level, because also if you watch for hour, look at this. Okay, I will use this low, so look. Okay, 143, this is 35 low. So this level, 143, 35, 30 is a good sell with stop loss at 60, 142.60 is the target. Look. So this level, and we have a confluence here also. We have a confluence here, 61.8 Fibonacci, 50 Fibonacci also here, very close, previous low, and this should hold. Okay, 35 should hold. So I will be looking to sell euro yen. Okay, Mohammed, I don't discuss about previous forecast, people, because now it's a new year, so we are starting fresh. And previous forecast, to be honest, I didn't trade anything except euro dollar a little bit. So it's not very, it was only valid for 1 day, 2 days. And I told you, you can take those trades if you want to, but we are starting fresh in the new year. So, of course, next time on our webinar, next Monday, definitely we will mention, of course, today's Forex recap. Goran is asking, could we do dollar-yen analysis? Definitely dollar-yen. I will show you dollar-yen now. I also was thinking about dollar-yen. I thought about adding dollar-yen for today, but I can give you a probable setup of dollar-yen also. But now only pay attention to these setups I gave you now, because these setups are valid and we can have some nice pips from these setups. Okay, I will do dollar-yen analysis. What are the pairs? What pairs can close before Wednesday Fed news? Okay, if you want to trade this, trade today and tomorrow, you can try to trade before news, but 3 hours before news we should stop trading, because Fed minutes will bring some volatility to the market. Okay, so I can roll these lights again, but let me show you dollar-yen also. So let me pause the screen for a moment, and I will add the dollar yen to the, let me see, dollar yen, yeah, dollar yen, okay, template, let me see, dollar yen, yeah, this is dollar yen, guys. And now on dollar yen, I can say dollar CAD. Yeah, I can also do dollar CAD, but let's see first dollar yen, then we can do dollar CAD. Dollar yen, definitely, guys, I can say that I will mark a big support. This is big support. Okay. So this candle here is 180.85. Guys, what I think about dollar yen. I could give you setup on dollar yen, but the thing is, I would maybe buy a dollar yen around 190.50, 40, that region here, and I was thinking about adding 190.40, but the thing is, it's again, we have a stop loss here. So if you want to trade dollar yen around 190.40, if it gives you a retest, you can try to buy, but you should place your stop here. And I think dollar yen should go up, at least until Fed minutes. If Fed minutes are dovish, it will drop. But these 2 days will be buy into dips. So this can be primary, try to scalp this level, but this level is also good because it is big support. So unless this level breaks, unless this level breaks, this pair should go up, should be bought on dips, okay? It should be bought on dips. And it should go up until Fed minutes. On Fed minutes, guys, it can drop. We don't have any control for that strong news, okay? We don't have any control on that strong news, what can happen. I just cannot tell you how to trade dollar yen on Fed minutes. I wouldn't trade it, really, because it will be fundamentally driven pair. Dollar CAD analysis, dollar CAD, yes, dollar CAD. I would go long, but only after significant pullback on dollar CAD. Where is the confluence? The confluence is here. 1675 is the confluence. Dollar CAD, guys. Look at the confluence. Where is the retest of this level on 4-hour time frame? It didn't happen. Where is the retest of this level on 1-hour time frame? It didn't happen. Look, it only went up, 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 up with a huge gap. The gap has been closed. Now, if the pair breaks this low, it can give us 1675. So I can see this level 1675 as a potential long entry on dollar CAD. But where was the retest? None. 1-hour time frame retest, none. So this level should be retested because it was broken with huge up momentum on a strong news, okay? And technically it hasn't been a technical retest of this level. The technical retest of this level is only valid when candles do a retest of this level. Not news, the candles, price action. Okay? So that is the only way I can think of position trade. It's too long now. It went too much to the upside. And I need a bigger pullback. But definitely, I am not sure that this pair will give you the entry prior to Fed minutes. So you should pay attention to Fed minutes also. That will be a big mover for that day, along as with Australian dollar, Euro dollar, NFP. NFP will probably close the gap on Euro dollar, but only if the news for NFP are bearish. So if you ask me when I expect the close of the gap, retail gap on euro dollar, I can only tell you that it might happen on Wednesday and it might happen on Friday. One of these 2 days should give us a close of that gap. But still, if it doesn't close, we still have these possible setups. So memorize this and we will see what will happen. Euro dollar cable. And guys, you know how I trade. Use low risk trades. Because if you use low risk, even if you lose 50 pips, it will still be 0.5 to 1% of your account. Aussie. And if you make 1% on the trade, that means that you made your money, which bank will give you after a year on deposit. So basically, if you make 1% on one trade, you should be happy. I always compare trading to banks, and you should trade like a pro, having in mind low risk and substantial profits. And of course, if you're experienced from time to time, you can try to take a riskier trade, but then you should be able to recover from the loss if you know how to. So 81.30, 81.60, 80.50. Buy level scalp is 80.50, definitely on Aussie, and 80.30, scalping levels. New Zealand dollar position. Oh, I would like to see this trade 77.40.50. This could give us nice sell. And Swiss yen also 190.25. And euro yen. So we will see. I hope the start of New Year will be successful for us, and we will make some money. Yeah, great fundamental insights, Tarantula. Thank you for the webinar. Hope for the Greece. Yeah, I also hope for the Greece law. Great green Pipsy 215 for you, 2015 for us. Yeah, for us. Definitely for us. And I would really like that Eurozone do not suffer from crisis, because this crisis can have a huge impact on the monetary world we know today. So definitely we will see how elections will go, but if Syriza wins the elections, they will definitely try to renegotiate Greek debt, and that will be a political debate. So we are not into that. As for the moment, things are looking very bad for euro, very bad for euro, because there isn't anything on you know, guys, when you trade, and when I say NFP will give us next 2 weeks trend, it's easy for me to say, okay, NFP was bad, euro dollar should go into intraday buy into dips mode. And then I open my template and I do the analysis. I post the analysis on your markets blog, Forex Factory, and I tell you, okay guys, now is the time to go long on euro dollar. The problem is now that this move is politically driven. This move is fundamentally driven. This move does not have anything to do with technical analysis. 5 years ago, 4 years ago, whatever, this low was heavily bought, and now this low was touched and it wasn't bought. It was only 50 pip. That's nothing. Look at this jump from this level to this level. Look at this, 3,000 pips. And look at monthly. Now we need to pay attention to this monthly candle, how it will behave, but it will be politically driven again. Now is the time to reconsider Greek debt. Now it's time to reconsider quantitative easing measures for the whole Eurozone. Yeah, now how can the debt be repaid with no growth and with 28% unemployment? Now that is the question, good question. The debt can only be repaid with credits. I know it's not the solution on the whole, but now it's the solution at this moment. At this moment, and with measures you need, basically here in Serbia we also have some measures which were imposed by government. Pensions are lowered. National sector also have lowered the payments. So we are also in the situation here in Serbia to have some lowered payments and pensions. So there should be political consensus, guys. That should be political consensus between those parties in Greece and between people in Greece and Miss Merkel. Only then there can be substantial solution to Greek debt. And I hope that Greece will come out of this crisis. Really, I hope that for the sake of whole Eurozone and Euro monetary policy, and Euro monetary union as a whole. Okay? Now the only question is how your parties in Greece will be flexible. And Germany, of course. The question which does not have anything with this webinar is, I have a question, I win a prize on Forex Ball, $500, and now I have the bonus on my live account. But when I want to trade, trading this symbol, I don't know about that. Please call Admiral Market Support. I don't know anything about that. Sorry. Trading this symbol. I don't know what that means, but please ask Admiral Market Support about it. Okay? I definitely can agree with statement that communism and chaos is not a solution. Believe me, communism is not good for anyone. Okay? Maybe for the country such as China, because they have more than 1 billion people, they should be under a strong foot. But communism for countries which are not so big is not a solution, definitely. Okay? And sometimes, guys, I just cannot explain how hard it was for us during 1990s here in Serbia. And that was the time which was much, much worse than Greek is today. But we wasn't a part of European Union, so the world didn't know how hard it was to live here in Serbia during 1990s. And that was all because we had bad political government. And from my experience, I know that the only way to overcome crisis is to have a political and national consensus with parties who are negotiating. And I hope that Greece will come out of this. Again, I say, for the sake of European Union and European monetary policy. We will see what will happen on 25th of January, and also for the short term, we should eye Fed minutes and NFP on Friday. So guys, thank you for listening to me. Let's make some pips. Let's trade it. I will be here with you each day with analysis, every Monday with weekly recaps, and our standard expert opinion webinars. Thank you for listening to me, and I wish you to trade safe. Cheers!